Please welcome WestCap founder and managing partner Laurence Tosi in discussion with Skift founder and CEO Rafat Ali.
Well, thank you, everyone. Thank you for sticking around. So I'm gonna do shots for the last session, just in case. No, this is hot water.
Cocktail time.
I'm losing my voice, so I'm just gonna be drinking a little bit of sips of hot water through the last session of the day. So I'm really excited about this session. This is certainly an honor to have you here, LT. When I had the call with you 2 weeks ago, you said, I don't speak at conferences, which you don't at all. But I really want to do this because you've obviously you were on the other side of the coverage when you were at Airbnb. For people who don't know your history, you've been at Merrill Lynch, Blackstone, Airbnb, running a bunch of things. WestCap, which is your venture firm, which investment firm, which has been there for how many years?
20 years.
20 years. And you have investments now in Sonder and a few other
Blue Ground.
Which I think are here. They're
Yes.
here somewhere.
Alex is right here, the CEO, Blue Ground. I think Francis is here somewhere. Maybe not.
He was here in the morning. And so from your vast experience, one of the voices that we're missing today, and you are the voice, is the real estate voice, which is from an investor perspective, from a real estate investor perspective. We're sitting here in New York City, obviously, the hub of real estate investment, so to speak. From your investor hat, how do you see this sector? Why does it excite you so much, obviously, post Airbnb?
So maybe a little background. So for the almost decade that I was at Blackstone, we spent a lot of time, obviously, looking at real estate investors, largest real estate investment firm in the world. We also were the largest hotel operator in the world. And so I spent a lot of time, actually, the first time I came across Airbnb, and Brian and I met, was a long time ago, it was before I invested personally in the business. And I started thinking about what's the impact of basically all these digital economies and businesses that are being built, what's gonna be the impact on real estate prices? And so we were confronted with issues a bit even back then, which was, what's WeWork gonna look like, and should we rent office space to them? What's Airbnb gonna do to the hotel business? What does short-term rentals mean for multifamily? And so I started thinking about it from an investor's perspective, and still today remain a large investor in multifamily as well as hotels, et cetera. And so I think it's an aspect of the story that I think needs thinking about. So for the better part of the last 6 or so years, I guess I've been looking at both. The way I look at the market is broken up. You've got the marketplaces like Airbnb, and then you've got the content providers, which could be under a couple different managers. Some are property managers. Some are what I would call management companies that lease businesses like a Sonder or a Blue Ground. And then you've got the real estate investors in the bottom. And so there's all different pieces in the ecosystem, and different capital is being attracted to the different stages in that, kind of in those layers of the market.
And so from a real estate perspective, why is it such an attractive market right now from you?
Well, there's a couple things. No surprise to anybody in the room. We are obviously, all of the usual signs of a late cycle real estate market are right in front of us, and it's there. You can see it in the expansion of cap rates, which are the multiples that businesses trade on when they're leaving, and you can see it with the absorption rates are slowing down, and you're seeing that more and more multifamily that's coming online are having a harder time leasing them up. That's being matched with the rise in short term, and so it's an interesting time in the cycle. And I think you're starting to see now, for the first time, large-scale multifamily developers and even individual developers start to contemplate maybe STR, short-term rentals, is a better way to fill the building. Maybe it's a more optimization for the use of the space. And so I think those dynamics are slightly accelerating right now as we get further on in the cycle, and there's actually, frankly, excess capacity. At the same token, if you look closely at revenue rates, RevPAR rates in hotels, they've been stubbornly high for the better part of the last 2 years. And so they've kind of frozen. So you're seeing people look for alternative accommodations, and you're looking for them for, frankly, for better deals. So in the short-term rental market, it could be either vacation or it could be urban. It's a matter of the use cases, I think, are a little bit broader than a hotel. You've got more room. We've got 2 little kids, so I usually travel. I'd rather be in an apartment than be in a hotel room. My kids are like professional capital asset depreciators. They seem to break everything, so I'd much rather be in a house. And so you're seeing that right now. You're seeing the different things play out, and I think some of it's accelerating on the back of where we are in the late cycle in real estate.
From a urban short-term rental market versus a vacation rental market, there was a presenter earlier today, Drew, I don't know if he's still here, he said that the urban market is going to be bigger than the vacation rental market. Do you, one, have a point of view on that? Two, from an investment perspective, which is more attractive?
Well, the models are different, right? It's very hard to get the kind of concentration you need to run short-term rentals in vacations. And that's why I think the leading players in the vacation rental space, like a Vacasa or one of those businesses, are much better in kind of let's call that a digital property manager for individual homeowners. And so that I think will always be a very fragmented market. I think you'll see a concentration in urban short-term rentals where it'll be fewer players, and it will be more the management style, like a Vasander or a Blue Man. You're more likely to see that style play through. So I think the vacation markets need a higher level of service. It'll remain fragmented because it's geographically dispersed. You have to have the services that'll be dominated by individual homeowners. I think then in urban, you'll see more and more concentration because the services require concentration to make the economics work. And I think you'll see institutional capital backing buildings that have short-term in it. Because when you think about, let me just kind of walk through how I think about it. When you look at the J curve of investing, when you put investment in the ground, obviously you're negative the amount of that investment. It takes several years of cash flow to pay yourself back. You get to break even, and then you have a gain. That J curve is compressed tremendously when you're able to lease up an entire building or part of a building through short-term rentals. And that phenomenon is coming through. Seeing a lot of underwriting coming in. I mean, somebody sent me, I think, my 10th short-term rental proposal this morning for somebody. We're going to buy a building and we're going to lease it to Saunders. Like, okay. But still, it's a real estate investment. So the one thing I would caution is make sure that you make those determinations in separate. You should underwrite both as a multifamily traditional and as having short-term in the building, just so that you understand the returns. And I've always believed in don't mix the real estate fundamentals of real estate investing with get confused about what is and isn't a technology business. The Saunders of the world are technology business, technology platforms, just like Airbnb is.
But wasn't that the pitch that WeWork was giving?
It was. By the way, that's a very different model. And let me explain why. Everybody in the room's like, oh no, the WeWork effect. By the way, it has had an impact on STR. So now when I'm meeting with developers, we're looking at several buildings inside of WestCap. I mean, the first question I get is, well, isn't this all like WeWork? And here's the fundamental difference in my mind. WeWork has to compete with the landlord locally to succeed, right? Because the demand is basically local. Travel's a global business. So it's not many operators or owners of a building are going to be able to globally market their building around the world like they would through a platform like Airbnb. So it's a fundamentally different market, and I'll just give you the exact numbers. WeWork's contribution margin, which would be their revenues minus their leasing costs plus their local operating costs, not overhead, is like 15 or 17%. That's a thin margin business. When they say they had $1.5 billion of revenue in the first half of the year, subtract all the lease costs, it's really like $300 million. That's the way to look at that business. Short-term rentals are different because what you're really competing is with the size, scope, and scale of a hotel room. And if you can get more room and it can be efficient, it's a better experience. I mean, I travel quite a bit. I'd much rather be in an apartment with an efficiency or be able to have people over for a meeting or something like that than be in a hotel room. And so that dynamic's very different, and therefore the contribution margins are 50% plus if you do it right. The one thing that will be hard is it does take concentration. I mean, we looked at the thesis Blackstone had when we bought Hilton in 2006 was that we believed the rise of the concentrated portfolio of hotel assets would give a superior experience and that'd be a better investment. It's literally how we thought about it. We thought, well, we had, I think, 7 Waldorfs, we should have 40 of those. We never had any Conrads, we'll make some of those. We didn't have Garden Inns, so we built a family around the Hilton Honors things. I think that's what will happen in the short-term space in urban. I think you'll have very few players that'll maybe have multiple. They'll have a luxe version, they'll have a long-term version, and they'll have a short. And that will be the persistent thing, and it'll concentrate around a few players that will make it, because this is, in the end, a scale business. So one-off buildings and stuff, a little harder, longer putt than I think the bigger players.
Speaking of Hilton, I was speaking to Nasera 6 months ago, and he said that he doesn't want to be anywhere near this market because Stephen Schwartz said to him, focus on what you know best, do what you do best. Do you think that hotels, the evidence that you have in front of you so far, give you confidence that they would be able to be a serious player in this market?
So it's interesting. First of all, Kristen said a great operator, world-class job what he did with Hilton. When you think about it, when some of the time that Blackstone bought it to where it is today, he did an amazing job. And I agree with Steve Schwarzman's advice to him. He's so good at what he's doing, and Chris will stay that. He's a great leader, great operator, great person. I would say this. Let me repeat this conversation. So I had another hotelier ask me, well, geez, maybe we'll do this short-term rental thing, et cetera. I said, okay, let me get this straight. So you're going to go find the data scientist that you don't have, to build the software you don't have, and you're going to then find buildings that you don't rent that compete with your hotels in the same place. I don't know if that's going to work out that well. And so I think the hotels, to them, it's competing with their existing franchisees. I'd be furious if I owned a Hilton flagged hotel and they were opening up apartments across the street, and I don't think they'll do it. And Chris is very sensitive to his franchise and his owners, and he's been a great leader in that respect. And I also think, in the end, the scale players in STR are the ones who will have technology matters, scale matters, operation matters. The reason why we like the business is because it's hard. It's actually hard. It takes technology, it takes knowledge, et cetera. When you think about, I thought Margaret did a great job for Airbnb. She's an incredibly impressive person. Think about, like, when first people looked at Airbnb, there were tons of copycats. We weren't even that big, actually. There were other places in the world. I think Wimdu at one point was bigger than us in Europe. And what happened was, Brian Chesky and the team are so good at technology, data science and marketing, et cetera. They've built a competitive moat that really even HomeAway, which was in the business 15 or 20 years ahead of them, is struggling more today with Airbnb than they were when Airbnb was small, because Airbnb got really good at the very hard things to duplicate.
What happens with HomeAway or VRBO?
They've had an interesting week. Look, I think it's a great business. I think the risk would be...
Would you want to buy it if they sell it to you?
I'm not going to comment. Well, yeah, that's the wrong person in that question. Now, obviously, I'm still and will always be a very long-term scale shareholder in Airbnb, so don't anybody be confused where my allegiances lie. It's Airbnb, and a very happy shareholder, and it's been a great relationship with me and the company for a while. So I would say the vacation market's harder, and because there's much more cross-listing, and so there's more competition for the guests. If you look at the announcement, we knew a lot about HomeAway when the deal was done. Just put it that way. And what the thought was that eventually the professionally managed listings will be cross-listed, and it's less defensible. If you heard Margaret just go with what she went through, the core of Airbnb is that community and the individual homeowner. They are the best at it because it's a community. They have built a brand around that. That's really hard to disrupt, and it's very defensible. I think the issue that VRBO is always going to have is that vacation. I mean, if you go look at like Vacasa, they've done an amazing job of going to homeowners saying, "I'll get you more occupancies because I'm going to list you everywhere," and that's what I think is eating that business. And the core business of Airbnb was really urban travelers in shared spaces, and they never really lost that core. And it's what is unique about it. I also think it's the best business model of any of the businesses that have gone public and will go public.
So let's speak about Airbnb. Obviously, you were there for how many years?
3.
3 years. You were the CFO, but not just the CFO. A bunch of other teams were reporting to you as well. I guess, in effect, you were the COO from that perspective. The media reports about you leaving, obviously, was that there was a difference in vision of how you wanted to grow the company versus how Brian wanted to grow the company. As you're sitting here today outside, obviously you're still a big shareholder, as you said, in Airbnb, investor in it as well. Do you think that they're focused on expanding the vision outside of just accommodation?
Yeah.
Sorry.
So
in terms of short-term rentals, they bought Hotel Tonight, obviously they're going to experiences. What do you think about that?
So let me take the first. So, one article had Brian and I disagreeing and stuff, and I'll say the same thing he said publicly. Totally not true. I love Brian. I think he's a great leader. Get along well with him. Always was a supporter beforehand. CFOs and CEOs don't always agree on everything. Of course, that's natural. It should happen. I probably disagreed more with Steve Schwarzman than I did with Brian. But we both chuckle when people keep asking us, well, I heard you guys didn't go on. One article said we didn't go on. I think he's great. The relationship's great. He's a wonderful person. I think they're doing a really great job of expanding the business. I thought the Hotel Tonight acquisition was brilliant. I think that Hotel Tonight built a very hotel-friendly, especially for boutiques and independents, product that allows them to sell spare inventory and match that with travelers that really last-minute bookers that want to be able to get a good deal. I think Sam Shank's a great leader and a great business. So I think Airbnb is in a really good position. And if it was wondering, well, when are they going to go public? They can take their time. That business is so good they go public in any market.
Do you think that Margaret was there obviously right before you, that the trust and regulatory issues are only going to get harder from here?
Well, first of all, you just saw it. I think Margaret's done an amazing job on the trust and safety. No, I don't. I think there's a little bit more.
Post-IPO as a
Yeah,
as a
I think there's
company?
just more attention on them right now. I mean, all the innovations that Margaret went through, and she's doing a great job at it. I mean, it's obviously there are factors in that business that come in with it because it's big and it's a platform and things happen. You just don't read about things that happen in hotels, and believe me, having been sued up the corporate chain for all kinds of things. It happens. You just don't hear about it. And so I think that's a little bit. And I think everything that Margaret's doing about the qualification listings is great. I think as they've always done, Airbnb will do the right thing. They'll lead the market, and they'll push the envelope for the benefit of the guests and the host. And they will always do that. That's in their culture. So no, I don't think it'll get worse.
Sonder, which you're an investor in, why did you invest in Sonder?
So I started thinking about. So I was looking at how people were booking on Airbnb, and I started noticing we were getting more and more families, and we were getting more and more what I would describe as mainstream travelers. We're also getting more mainstream complaints. And I started thinking, I get it now. I think it's about controlling the experience and controlling the content. How can we do that the best we can? One of the things that was launched was Airbnb Plus, which is a little more controlled experience. Right. So I started thinking about, well, then I drew an analogy to Amazon and to eBay, and I thought, why did eBay, which at one point was bigger than Amazon, and Amazon would distribute its products on eBay, and I thought, what happened there? And I looked back and I said, eBay had an unstructured marketplace. You could buy the same product from a different person. It could arrive in completely different condition and be described differently. They still struggle with that today. It's kind of like the Wild West of purchasing. And Amazon said, no, you know what? We started with books and we're going to move vertically, but we are going to control that experience from the minute you order to the minute it's delivered. We're going to give you consistency, bundling, et cetera. So I thought unstructured marketplace, structured marketplace. Well, Airbnb is always going to be the leading marketplace. And I think they'll continue to expand their product. But who provides the content underneath? This is how I thought about it. Who provides the content and the experience that's a hotel-like experience in a home sharing setting? Who is that? Who's out there? So Brian Chesky and I went out and we started meeting with all the different businesses. And in our office came this incredibly brilliant 22-year-old Francis Davidson. And I remember him giving a pitch to Brian and I, and we looked at each other like, this guy's really talented. And I asked him two questions. I said, you're raising money, right? Can we raise money from you? You can be exclusive to us? And he paused and he goes, no. It's like, good answer. And then I said, well, why don't we just buy the whole thing? Let's be friends and we'll buy the whole thing. He said, no. And I said, why? He says, I think I'm building the next great hotel chain. And the rest is history. So then I decided that I thought that I went in, we invested quite a while ago in Sonder and started working with Francis, which our model's very different. It's a little bit like Airbnb. We make investments and then we spend a lot of time on that business. I mean, my firm's made up of Blackstone folks, IPO, which is a business that I started in the fintech space, and Airbnb alum, and we focus on the business. So I focused the last few years with Francis, and what I discovered in the SDR space, it is everything I thought it was. You can have a great product. Their NPS scores are phenomenal. I don't think it's a single product. So Blueground, for example, does corporate housing. I think there's a market for that, and I think it's really interesting. Those are much longer leases. Your clients are, the McKinseys and Goldman Sachs of the world, and over here you've got the Sonder, which is more like a hotel-like. But this is how I think it's hard to do. It takes scale. You got to be good at technology. You got to be great at operations. You got to be able to run a company. I like that because it's defensible. And so we've spent the last couple of years together with Blueground on the long-term stays and with Sonder on the short-term, to kind of building world-class assets.
Do you think they will become consumer brands?
I do. I think today Sonder's bigger than.
So will they have the same fight of like direct booking versus like what it is in the hospitality space?
I think the market will tend. I think that's right, Rafat. I think it'll tend that way. I think you'll end up with a few brands that people will attract to. Some of the business will go direct. I mean, today, 75 to 85% of all the traffic that goes to Hilton, Hyatt, and Marriott is direct. That's the way that business works. And so if you can get to, and the reason for that is the scale, the rewards, and all the things that create that virtuous cycle. And so I think there will be a few that will escape to that level of scale, a few.
Would they have to go out of the short-term rental market to build that scale?
No, I think you can do it just in the short-term rental market. I think you can do it urban.
So why is Sonder doing a hotel?
Well, it's the same thing. To me, that's short-term rental in a hotel format. So it's the same thing. But I think in order to succeed, you're going to have to be global. You're going to have scale. You're going to have the ability to capture repeat business because you're going to have a footprint that people care about. And you're going to have experience that's really, really good. That all takes scale. So when I get all these like business plans like short-term 101, and I think that's a harder model, to be honest, over time, because I think it takes scale. And we're also starting to see that the developers and the land and the owners are starting to gravitate towards the bigger names in the space because there's safety in it. It's just happening. They're coming to us now.
Do you think Oliver was here from Booking before, and Booking's view is that a consumer will come in for a blended view of hotels, or they'll show everything in a single interface. Personally, as a user, I don't think that's the case, certainly for me. Do you think that's where the market is going to evolve to?
I actually don't. I don't. I think they're use cases. I mean, I bet you that's true, and you can kind of nod your heads. I mean, when you think about you're going on a ski trip, we're going to be in a house, I'm going to go to Airbnb. If I'm going to go traveling and I'm going to be in urban in a hotel, I might go to Booking or something like that. That's how people think today. I think there will be Airbnb with some hotels next to it, and there'll be hotel sites with some homes, but they'll predominate around what their core strength is. So I don't think it's an odd experience to see like a house next to a hotel. It's not really, to date, to me it hasn't become the blended experience. It hasn't worked that well at Expedia so far, and that's why they're having the issues that they're having. I mean, they've integrated it completely with Expedia in general, and they're not having probably the success that this is their own words in the last couple of days, the success that they wanted with that integration, Rafa. So I think they'll remain separate.
What are the services in the short-term rental market that you think don't exist today that you would like to fund or build, et cetera?
The automated experience. And so there's as part of both Blueground and Sonder, we are deep at work at completely changing the guest experience to a completely digital experience with everything. So we've already recreated the space. Now we have to recreate F&B. And we have to recreate business services and all the other things you expect in a hotel.
And how does F&B play into the space?
You should be able to walk into a hotel and say, I want that into an Alexa or other device. It should be delivered into your room. I think you can service a short-term rental as well as you can service the best hotels in the world. And so that experience will be automated.
So tying up with DoorDashers or whatever, those types of companies?
Yep, fully integrated. You do that today. Today on Sonder, if you travel, you put in, I need a crib. The crib's there when you get there. So that is an interesting experience. We're actually finding that users really don't want to call the front desk. I mean, people like to call the front desk, not fun. And so creating a more automated experience around that, I think, is valuable. And that's also, you got to look at the use cases that can't be replicated by traditional hotels. One of them is you've got one food and beverage in most cases, so you can give diversity. You've got you're limited into the business center in the hotel. Well, what about the business centers around it? Airbnb, we did a deal with WeWork, so Airbnb travelers could walk into a WeWork. There's a lot you can do, I think, Rafa, and we're deep on development, and the technology element of the short-term space is compelling. There's a lot more to be done to make the experience better.
And what are the holes in technology you think today?
I think automation of the home experience, including the delivery of physical goods and also just city guides and things like that, I think aren't there. And also the optimization of your room balancing and things like that. Pricing. Yeah, pricing for sure. So that's really at their core. The best STRs are technology-driven businesses because you have to be good at hospitality, but you also have to focus on the technology. But that's the part that's not replicable by single owner landlords or small groups of landlords. And I think that's where I'm seeing like these business plans like, oh, we're going to do STR, we're going to list it on whatever. That's not a sustainable model with a couple of buildings because you're going to need something of scale. And that's, you proved that with Airbnb. I mean, a lot of the growth of Airbnb was viral. All we had to do was plant a flag, and then once it started going, the product was so good that people aggregated to it.
Do you think so? All these companies that we heard from today, including obviously some that you've invested in, are all U.S. focused. Do you think that, for instance, a Sonder could be in 20 global cities, or or is that not the route they should go because of what happened, for instance, to WeWork, et cetera?
Well, first of all, in any business, you have to be super careful about how you grow it. And if you can't see, you have to, first of all, you have to have people that understand the dynamics of the market. What's interesting, what we look for in the STR space is a real estate business sitting next to a technology business, and you have to be good at both. You need management teams that understand both, not just one, both. And you have to understand them really well. We underwrite buildings at Sonder like we were underwriting investments at Blackstone. Like if I showed you the criteria that goes into rate, time, space, location, block, people, seasons, all that, we look at almost 350,000 units a year. We can tell you where they are, who's most likely to book them, where that person came from, what the channel is, what they'll pay, when they'll show up, when they'll leave. It is incredibly hard to do, and therefore I think it's sustainable. I do think you can build a global brand on it. We're very US. There's a lot of players in the STR space out in the world. Alex started Blueground in Athens because he didn't like corporate housing. Corporate housing is kind of sad. You go in, you just feel sad. You're like, this is sad. Because the corporate housing world, they own the biggest players, own the properties, manage the properties, market the properties, and sadly, design the properties. And so Alex was traveling around the world, and he was working for McKinsey, and he said, geez, why doesn't somebody do it with a little higher end so I can have an average stay? Their average stays are 5 months, and they're a global business. They're just now entering New York and some of the other cities. So I do think there will be global players. We've looked at hundreds of businesses. There are smaller players starting to build, But I think this is a long-term trend, and I think it's one that the travel industry needs, and I think it's one that real estate investors are welcoming.
Last question before we end. From a regulatory perspective, where do you think we're in the cycle, and how does this get resolved? Because it seems to be 2 steps back, half step, whatever.
So a couple thoughts on that. First of all, you have the world's expert on regulatory hitting short-term rentals before me, so I couldn't add anything to what Margaret could say because she's the best at it.
From an investor point of
Yeah,
view.
from an investor point of view. So regulatory risk is, for me, it's binary. If there's any chance of wipeout or a change of rules that's going to affect your business, don't touch it, because you just don't know. If it's not going to happen, you don't know what you don't know. It's a corner you're not going to see. Don't take the risk. Short-term rentals, professionally managed, sit inside the hotel infrastructure for regulatory in most cities. So that you're playing on the same side of that industry. And so that actually is fine. And we look at that 100% at any time we look at any location, any building, where the laws are, where they're going to go. And we also look at who could be against us and what they could potentially do that might impact us. And so I think it's something you have to be aware of. The idea, and there was, I will admit, in the early days when I first invested in Sonder, there were some gray area apartments. There are no longer gray area apartments. Those are gone. So just be careful with it. If you're in a spot, you should understand the rules. And they're very, very complicated. I would say the different licensing regimes that the businesses are under are more than I can count, but they're different. Roughly, some are hotel licenses, some are commercial zoning, some are a conversion of office to multifamily. So it just depends on where you are. But I'd add that to the long list of things that you need to really understand to make these businesses work.
The last question says you're going to thank Skift and say nice things about us.
No, the reason why I wanted to, first of all, I wanted to finally meet you, and I really appreciated your note. I actually think Skift has done, and they do not know what I'm about to say. I think you've done a really nice job of writing really thoughtful articles about a great, exciting business in an objective way that brought light on something that I think the customers need, investors want, and it's just, and I respect that. And so that's why this was my thank you.
Of course, thank you. Thank you for being here. Appreciate it.
Appreciate it.